Good evening. Welcome to my November 20th, 2022 market review. This is a Monday, very interesting day. Let's take a look at the charts. So on the left, or on both of these charts actually, we have our equities. On the left, we have our S&P. On the right, we have our Nasdaq. Now, these both did something that if you're familiar with the high time frame ideas of the ICT, if you're familiar with those high time frame models, um, this is pretty much textbook, especially in a consolidation. So we had our consolidation level pretty much all through the week, and then today we dug down during London just a little bit. We came up, we dug down during New York, and we rocketed off. Right. Um, as you can see, we did that in Nasdaq as well. Um, so this is pretty much an expectation that we should have had because of what we were having going on here and what our high time frame ideas were. However, um, what the crypto was doing was really holding me back. So let's take a look at that. So cryptocurrencies, they should have really been in a raging bull market. They should have been going straight up, no pass and go, no nothing. What do you notice about Bitcoin? Don't worry, I'll wait. I'll point it out and I'll wait. Now, what do you notice about Ethereum? Okay. And then I'll show you Solana, if it lets us. Okay, it shows us Solana. Okay. Now, does that look like a raging bull market to you? No. So the bullish pressure in the marketplace, I didn't expect it to be there. Now, why was it so important for me to expect bullish pressure in the marketplace to get something mechanical and mundane, like a pop for liquidity objective and a consolidation from from kind of crouching, right? Like what? Why would I demand that? Why would that be necessary? And why would this be out of my well, out of the realm of my expectation? It's because we're in November, basically. So right now we're in the week of Thanksgiving. This week is going to be very very illiquid. Now, what does that mean? That means one of two things. Either we can have very choppy, very sideways price action that likes to gravitate and just kind of meander and drift and just kind of come back to an equilibrium, or or if you're familiar with the Nasdaq, um, if you've ever compared how the Nasdaq moves with how the S&P moves, you'll notice that the Nasdaq moves a whole lot more. It's got a lot more kind of like spongy types of movement. It slips a lot. It does all kinds of crazy stuff, and that's because it's a less liquid market, right? So what we're looking at during holidays is less liquidity in the market. So that's mostly less passive liquidity. There may be uh, there generally is also less active liquidity, but mostly it's just a less passive liquidity, like stop orders and market orders. So what that allows in the marketplace is that allows market makers, if they so choose, if they're interested in it, or it even allows whales, if they're interested in it, to push price around like crazy, very very, very efficiently. There's not as much resistance against that. It's a time that they can do that. So it appears like that's going to be the flavor of the week. So because we saw this happen during this Monday, I really expect that we're going to be reaching for these higher objectives very, very soon. Probably tomorrow. We're probably going to cap off the week tomorrow, and uh, so we're probably going to cap off the week tomorrow, and we're also going to probably probably cap off the quarter as well. So let me show you why. All right. If we go over to our economic calendar on Forex Factory, we see today. All right. Not much happened today. In fact, nothing happened today at all. Right. This is the pound had something happening at 1:45 p.m. That's something that would have affected. That is something that would have affected the British. We had some Aussie dollar stuff. Nothing excited. Nothing really that would get you excited, right? Tomorrow, tomorrow we have our interesting stuff, right? We have some news at 10 a.m. I don't really care about that because look at what we have at 2. FOMC, right? So this obviously it's not a full on like FOMC conference and everything. It's not the whole dog and pony show with J Powell and all that stuff. However, however, it's still a very significant and in fact is the most significant event on the. Let me read this. It is the most significant event on this calendar. All right. Thursday we have Thanksgiving, right? So before Thursday, I'm sorry. Let me get the voice crack out of my voice. Before Thursday, there it is again. All right. Before Thursday, I expect the market to turn around. Okay. Now, why would it be before Thursday? Why not on Thursday? Why not around Thursday? Why not after Thursday? It's just because that's Thanksgiving, right? So the market makers aren't even going to be in work. It's just going to kind of go sideways, just kind of really sad range, just kicking it up, kicking it down, kicking. Thursday is going to be sad, all right? Just mark my words. That is prognostication that I have. If you don't see it in the charts, then I'm a liar. I don't know what I'm talking about. Um, what? No, don't watch Thursday. Be with your families and stuff. But it's not going to be a good day to trade. Neither is Wednesday because that's the day before Thanksgiving, right? So if Wednesday is active, it's mostly just going to be ripping people out of the markets. Um, it's not going to be a good time if it's volatile. If it's not volatile, it's going to be like Thursday, and yeah, we don't want to be participants in that. That's not cool. Well, maybe if you're trying to put a position on, days like that might be nice because you can run a lot of um, projections based on them. You can do all kinds of stuff. It's mostly they're best for projection work because they just kind of kick up and down the market to to pretty much the true up. They kick up and down the markets pretty much to the true upper and lower limits. They're the most accurate days. However, um, they're not eventful. So they're good for projections. They're not good for participation. So just keep that in mind. Um, just we're not even going to touch Wednesday or Thursday. I don't even think I'm going to watch Wednesday. Um, Probably not going to watch Friday. Friday is going to be pretty much a continuation of Thursday. It might. Mm, I don't know if I want to say that actually. Friday, I guess we'll just be careful because after seeing what the Dixie did during its or after seeing the Dixie decline kind of normally, kind of like how it really wanted to, how we saw that that bearish pressure wanting to take it down. Um, so Friday might be it might be interesting, but I don't know if it's a good thing to participate in. But tomorrow, definitely, I want to see the market just kind of reach and spread its wings and do all kinds of crazy stuff until until that FOMC. Um, Basically up only, um, not too much retracing. Well, if it retraces at all, its limits are going to be like hourly levels. They're not going to be 4 hour. They're not going to be daily. They're not going to be. They might even be. What's the word? Yeah, I mean they might be limited to features on the 15 minute and the 5 minute, right? So like when today when I finally recognized what type of day it was, I tried to take some longs and I tried to do it on a 5 minute basis. Now, why did I do that? It's because the market is just so illiquid. The market is so the path to the upside is just so easy right now that because they're just pulling it to the upside, um, um, that they just want to rip it, right? Basically, moves like this, especially around the holidays, it's like ripping a band-aid, right? It's basically them ripping the band-aid. They're taking they're taking advantage of the fact that there's no orders in the market, and they're just picking up the market. They're just like hurling it as far as they can throw it towards their objectives. So um, so yeah, that's pretty much what's going on there. That is pretty much what's going on here. Now, I did note during the live stream that um the only way to predict these days is if the quarterly and the monthly line up. Now, why would I say that? It's because this type of day, this is not even typical of holidays, right? The market, it can move around. It's possible for it to move around, but it can also just chop. It can also do nothing. We saw a lot of that during when was that? Mm. Well, we saw a lot of that before the holiday during the 4th of July. It was just chopping around, doing nothing. Oh, excuse me. But yeah, I mean, for most of the holidays up until really this one, it was just chopping around, doing a whole lot of nothing, right? So that's really the expectation that you should have for the holiday, unless proven otherwise. Um, this type of price action, you should not be really predicting it during the holidays. However, when the what's the word? When the monthly protractionary period and the quarterly protractionary period, when they overlap, they create these incredibly like huge, massive, crazy parabolic moves, which um, they look crazy in the chart and they feel like they're not predictable. They feel like they're just out of nowhere, like boom, and price just starts moving. But really, what's going on is that's the biggest of the big boys taking price to where they need it. So um, that's what it is, and basically you can just see that on the calendar. You can understand what's going on with that, and you could actually ride those if you're good. So um, let's see what else. I went over Bitcoin. I went over the equities. I guess status report on the bonds. We'll take a status report on the bonds. So remember what I said? I said that this order block, I want to see ZB in particular break above this. I want to call them bullish. They feel very bullish to me. However, we have to apply some sort of rigorous measure because we're seeing a lot of squirrely price action, right? Um, if we go in the Dixie again, is that normal? Is that good? Is that something that we should be seeing, especially in the conditions, especially in normal conditions today? Not really. No. Um, something's up with this price action. So what that means is that we have to measure and we have to use yeah, because like look at the 10 year doesn't look nearly as bullish, right? Does it? And we if we look at the 5 year, it's even less bullish, right? So um, these bonds they really feel held. Um, that's all right. That doesn't really contradict anything because remember Remember the type of read that we had in the indices. Let me show you. So if we take the NASDAQ in particular, we take the monthly, we can see that our eyes were on this order block. No, it wasn't the monthly. The monthly was in the ES. But we can see that number one, we're in kind of this consolidation structure, and we have our eyes on this order block, right? So something that's allowed, something that's pretty much a low resistance liquidity. What a low resistance liquidity run pretty much is during a consolidation. We have all these highs just kind of stacked, just kind of lined up, and there's just candy in all of them, right? So what happens is the market makers, when they're trying to consolidate, when they're trying to collect their orders, or maybe they're just trying to beat up both parts of, maybe they're just trying to beat up both sides of the market for some profit while they're waiting around for some news that they want to maybe act on or something. Um, they'll do something like this. They'll just run out these. They'll create these highs as they're driving down, 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 and then they'll just run them out. They'll just pop, 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 all of them, right? So actually, let me put a line right here. There we go, because that's important. So that's something that's very common, and that's really what the low resistance liquidity run is. It's when they have that consolidation, and they set it up, and then they just knock the candy out, and then they just knock the candy out of it. Oh my gosh! Wow, I can't even say English. I know it's horrible. It's horrible. That's green, right? Yes. All right. So remember the Nasdaq. Our target was this high up here. So I actually do expect this to run out the proper high, but in the S&P, I expect the high to be safe. So since we're inside this order block, let's look at the monthly. Boom. We can see that order block that I outlined. This is the first entry into this order block, so we can actually run all the way up through to the high of it. However, we should not yeah, we should not violate the close of this up candle. So what is that close? 46.68. If I put a line right there, that line should not be violated. If we violate that, we are, well, we're much more bullish than we should be. That is a very bullish sign. So that's not something that I expect to happen. But of course, if we look on, oh, it doesn't show it on weekly. But if we look on the daily, we can see that same sort of structure. We see the highs, the highs, the highs, and we're just kind of running them out. Pop, pop, pop. Because the market makers, they're bored or they're accumulating shorts or something. So they're just knocking them out. So that's really my expectation for the S&P. And the type of behavior that is it's a consolidation behavior. So while other assets are consolidating, like the crypto, which we saw the crypto consolidating, the S&P and the Nasdaq, they can just be charging up. That's permissible, and during times other than the holidays, that's actually something I would expect. However, how should I put this? That is not something that I would bank on immediately. Now that it has happened, now that it's kind of tipped its hand, I really do expect Tuesday to reach up and just keep taking the highs while it can. But basically, it's not something that you should preemptively be interested in seeking. So that's pretty much all I got for you for today. I'll see you guys tomorrow, and I will not be here Thursday or Friday. Well, I might do a short one on Friday. Well, I might do some short things on Thursday and Friday. I won't do any long form videos. I won't do a market review. But well, I'll do a market review, short one, probably 5 minutes or so. So anyway, thank you for your time and good night.